Here are a number of good reasons why I would choose a 30-year fixed rate mortgage for my home over a 15-year fix. Now, I know a lot of people suggest a 15-year fix because, it forces you to think more carefully, to budget better. It forces you to pay it off faster. You get a lower interest rate. So there's a lot of positives with it. But I think that a 30-year fix is a better option for me, and it may be for you. So feel free to consider what I'm talking about here. The first thing I want to note is that you get a lower monthly payment. This is huge. With a 30-year fix, you can get a little more of a house than with a 15-year fix. Now, if you're looking at the exact same house, you might as well go with a lower amount and take that extra money that you have coming, that you're saving, and reinvest it into something else. Now, this takes some determination, dedication, and delayed gratification. Are you disciplined enough to take that extra money that you were planning, or that you could have or should have been putting towards that 15-year mortgage, and are you investing in it into, like, let's say, an IRA or a Roth, or are you buying rental properties with it? That would be a good question to ask. Like, can you actually, as a mature adult, be disciplined enough to control where your money is going and how you're saving it? This is huge. So you need that delayed gratification and be able to invest it properly. Now, we're talking about more of this too, where you potentially can invest in other things such as rental properties. So, for example, if I would put like 20% down on a house instead of buying it in, let's just set up a situation where we're buying a house in cash versus a 30-year mortgage. So, because this is going to be indicative of the 15-year mortgage, because the 15-year mortgage is going to be a fast track to getting your home paid off quicker. But let's just say really, really quick, and that's, you have 100% down. You pay your house in cash, which most people cannot do. But let's just say you can do it. Why don't you want to do it that way? Well, you want to put 20% down because you can take the other 80% and go buy, with more mortgages, some rental properties. So let's say you have a $100,000 house, you put 20% down. Now you can take that other 20%, you have 20, 20, 20, and 20. So 20, 40, 60, 80, 100. So you take that one. So now you can buy 4 rental properties for each $100,000. So now you have 5 houses for the price of 1. Now you're like, oh wait, I still have to pay all these mortgages off. Correct, but make sure that if you buy that rental property, that it is cash flowing and that it actually can pay down the mortgage properly, and the taxes and insurance and all the maintenance issues. So obviously you have to calculate that all in. And if you want to know more about that, feel free to comment down below, and I'll be more than happy to talk to you about that. And while I'm on that point here, I want to invite you to download a link I have for you where I have a toolkit. It's a really cool toolkit, how to maximize the money that comes into your life instead of wasting it on certain expenses that are not needed. The toolkit gives you a guide and ideas on how to maximize your income and save more money. In fact, the example that my guide gives down below, you could possibly be up to $3 million, assuming like a 6% interest rate, over 30 years by just doing what the guide says. And that assumes a lot of things, obviously, and that's not a guarantee that you will as well. But if you are preserving that amount of money instead of wasting it on other things, you can possibly be up $3 million after 30 years by investing it at a very reasonable interest rate. Down below, check it out. Don't forget that. All right. So again, lower monthly payment, more house. You can invest that extra money, but you have to be disciplined and be willing to do that. And this brings up the next point, is it gives you greater flexibility. Let's say something happens in your life where let's say you lose your job. Well, with a 15-year fix, you have to be making that amount of money, bam, 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 every year. And if you don't make enough money, or if you get your job you get laid off and you have to get a job that pays less. Well, now you still have to be making up that certain amount of money to pay off that 15-year fixed. With a 30-year fixed, you have a much more relaxed schedule. It's spread out over 30 years. Yes, it's a little higher interest rate, but the numbers, if you actually run the numbers, it's not that much difference, but that's besides the point. So it gives you that flexibility to pay less. Now, if you really want to pay more, you can pay it off as if you're paying a 15-year fixed mortgage. And in fact, there's different methods of paying it off faster. If you want me to explain that, feel free to tell me, and I'll be more willing to kind of give you some of those directions on how to pay off a mortgage faster. But personally, I wouldn't do it. I might do it under certain circumstances. If I'm in a certain situations, I might do it. But right now in my life, I would not do it, like of today. All right, so it gives me greater flexibility. So that's number 2. Number 3, and I kind of mentioned this before too, you can buy a little better house for the same amount of money. So if you would want to spend, let's say, $1,000 a month on a mortgage with a 15-year mortgage or a 30-year mortgage, you can buy more with that 30-year mortgage because it's spread out farther. So it gives you a better house for that same amount if you want. Also, I do want to say, as a 30-year fix, it gives you that slow, easy, steady interest, the slow, steady payment over 30 years. And let's say your interest rate is higher with the 30-year than the 15-year. But what if the interest rates drop? Well, you can go and refinance 3 years from now when it drops. It's no big deal. Then you pay less. Actually, for me, that's another whole discussion, but I almost totally do a total refinance, pull out all the equity in my house and go reinvest in other things. But that's for a different story, for a different time. And also the last item I want to point out is the tax benefits. You get the longer tax benefits. You don't have to pay as much taxes. Do you have to pay interest? Sure. But interest is still lower than taxes. I'd much rather be paying that 3, 4, 5% interest than 20% taxes on my income. So it's a write-off. So that's very helpful. Some people don't like the idea, but it is helpful not to pay as much for taxes. All right, those are the main reasons why I would choose a 30-year fixed over a 15-year fixed loan. If that helps you out, please like and subscribe. Check out my other videos. Comment below. Have a great day.